Hello, hello. Welcome back after a break. Feel like people are still trickling in. How are you feeling? Woo! All right, so this is the panel for data-driven on-chain token distribution. I'm super excited to dive deep into this topic with the rest of my panelists. So to get started, let's do a brief round of introduction of who you are and your connection to token distribution.
Hello, my name is Brian. I'm the CEO and co-founder of RabbitHole. We are a Quest protocol that distributes tokens to users who are participating in different crypto protocols. But really excited to be talking about token distribution today on Make Sustainable.
Hey everyone, I'm Jack Gorman. I'm a data scientist at Variant, an early stage focused venture capital firm. Some of you in the room may know me as Jay Hackworth, where I've covered a lot of analysis around airdrops.
Hi, leader. I'm Subin from PES. I serve as a data lead at PES. So, as Tom mentioned, I assist many portfolios for the many other our crypto portfolios. So, Hashtag is one of the largest and most active crypto VC. So, thanks for having.
Thanks for coming today. All right, so to get started on the topic, when you hear the phrase token distribution, what comes to mind? What is token distribution and what role does it play in your opinion? Maybe let's start from this side because we did this side.
Cool. So, when I first heard of the token distribution, it reminds me many meaningless pie chart. Because sometimes they didn't, even though they didn't make it really cool way. So, and is there anyone here who got airdrop from any other protocol? Could you hands up? Yes. In my case, I feel jealous of him. I feel jealous of them. Yeah. Yeah. That's me.
Yeah, I would say there's kind of two ways I think about token distribution. One is kind of decentralizing ownership over to the participants of the network. Variant, that's kind of core to our thesis around having the next generation of products. The users are going to be owners of them. The second thing when I think about token distribution is really bootstrapping the network and kind of having it as a growth strategy. So acquiring users, customer acquisition, gaining liquidity, as well as developer mindshare.
Yeah, I'd say there's probably two main use cases of token distribution today. I think the first one that everyone's familiar with, or just both familiar with, is liquidity mining, which primarily stopped in DeFi summer in 2020. And the second one, which I'm sure we'll be talking about mostly in this panel, is airdrops. And actually, how do we get tokens in the hands of users in the most efficient way? So I think those are the two, and of course there are others as well that people have explored, but I think those are the two main for now.
Nice. So it sounds like there's a common theme. It's either for growth, where a lot of people think about it as marketing, and another way to think about it is more on decentralization, governance side. Yeah. Okay. So when you think about the challenges in designing token distribution, what are the major challenges either in the realm of marketing or in the realm of distribution or governance?
Give me a sec.
Sure. Let's go.
So I think one of the main challenges today is, of course, when you're distributing a token, starts a central entity that has the tokens. You're trying to figure out how do you actually get tokens in the hands of participants or contributors who are going to grow the network over a long time period. And I think one of the ways that most people do this today is a single time retroactive airdrop, and how do you actually get early believers participate in the network to actually continue to contribute. One of the main challenges of this is that you have people who get really interested when there isn't a token, which causes airdrop farming. And then once the token ends up existing, is that the interest kind of wanes down and leads this downwards death spiral, which a lot of crypto networks face. And so I think a lot of what people are trying to figure out today is, well, what does it actually look like post-token distribution in terms of the actual airdrop actually happened? Now, how do we get tokens in the hands of participants once that token is live? The main challenge at this point is, well, then you have a couple of growth strategies. One is grant programs, which a lot of DAOs end up taking, which have their own challenges. And then there's a couple of others, which is liquidity mining, which of course gets whales the network, but then again, it has the same issues with centralization of people that start controlling the network. And so we at RabbitHole really trying to figure out what are the other ways you can actually distribute tokens to participant networks. We think quests are a really good way of doing that. But I'll let the other participants on the panel speak about what they think as well.
Yeah, so I think for me, one of the challenges I've seen is that, like Brian mentioned, the one-time airdrop has kind of shown poor retention rates. People have sold off the token and they kind of go to the next piece. Part of the reason I think that is that, like, with crypto, we don't really have a reputation system built. So people can come in, they will like have, sibles, for instance, where one user is controlling 100 different wallets. And we don't really understand that from looking on chain. The second piece I would say too is that, like, with farmers coming in, there's not really a reputation system built in where they're just going from one protocol to one protocol, farming and then leaving once the airdrop is over. So I think a lot of what I've been thinking about lately is what type of characteristics do you want to see on chain that promote like the tokens you actually want to distribute to? So like having good type of behaviors that you would want to reward versus kind of the typical like transactions and so forth. So
I think also you had a great answer for the problem with the design, but I'm more focused on why there is no onboarding sector for make airdrop, like after airdrop, because like I think data-driven airdrop is very good way for the marketing, but one-time airdrop is very bad because they couldn't get any attention for this one. So most of other software like in Web2, they are trying to make their like payback or something to use as marketing, and it affects all the customers' journey, like AAR, acquisition to retention. But in here, they just got airdrop, but they have no activation like things to do. There's no activation features to do. So if you want to really design good way, we need to make more onboarding process after the airdrop, I think.
Interesting. There's so many directions I think we can take on how to make it more sustainable. And I also hear the theme, actually, we were taking the direction of, hey, marketing versus decentralization, but then it can almost merge into the same thing when you solve for one. Like when you, like a lot of airdrop partners, you would think about like symbol resistance, right? But then at the same time, with the retention, it's also about building that sustainable system. And then that kind of connects to what you talk about, like the onboarding from like acquisition to kind of like the So I guess maybe we go another round on specific strategy and tactics that you're thinking about on making this process more sustainable. You already kind of briefly touched on what Quest is going to give us over that. Yeah, maybe we start from you.
Yeah, so in the essence, what really definition of a quest in our opinion is a continuous conditional airdrop. And so you still use the same benefits of what actually makes airdrops work. It's actually making the rules of the game unknown, which is how you kind of defeat Sybil in the first place. So you create a snapshot of users who are actually eligible for a quest. That way, Sybils don't actually know how they qualify. Then you specify what is the action to be done. And then once the user completes the action, they're able to actually earn the reward. One way that you can also limit Sybil behavior in a continuous capacity when the airdrop is live is actually the reward amount that you're giving out to a user. So of course, there's a gas cost that's incurred when you're transacting on a network. The tokens can just be a form of a rebate of actually transacting itself. And so, we look at it as, well, what if you can actually earn tokens on every single transacting you're doing, even if it makes sense that at least participants and users in the network actually aligned with the growth of the network over the long term. So I think there's a lot of white space to explore in terms of what does an actual conditional, continuous airdrop, high velocity, we're talking hundreds of airdrops happening on a monthly basis, actually look like to grow a network in a way that's actually decentralized, with communities kind of controlling how that capital and tokens are flowing.
Yeah, I think definitely the continuous airdrop model has a lot of merits to it. So I think there are kind of like the lower tier ones where you can have a request, or some of these other models that might just be like a gas rebate, a certain like a $10 airdrop. But then there's also something I believe is really, instead of just like distributing to a crowd of people, really finding your most loyal users and doubling down on them. So I think it was interesting with the optimism airdrop where they rewarded delegates of who had been like, participating in OP governance. So I think that's like kind of interesting because you're seeing people actually hold the token versus selling it on. So I think that's a very like powerful way to really find, you know, the good character, good people in the ecosystem.
Also, continuous airdrop system is most important issue. So that's why I like the border and optimism. PYDX airdrop system is I like. Yes. I think these two both are having too much.
Next time, we'll start with you. Start with you next time. Okay. I think we're heavily talking about airdrop, which is okay, but maybe we can zoom out a little bit more. I've seen these charts on, you know, crypto trader in a space where actually when you use these on-chain incentive to onboard people, the cost of acquisition, it just doesn't really add up for the protocol that's distributing these tokens. I guess one, how do you think about that? And then two, how do you design a sustainable system in that way where the token and the incentives that you're distributing actually make sense for the protocol rather than just like burning through. Yeah, sure, you're kind of like making money out of thin air, but at some point it's not going to be sustainable anymore, right? So how do you make it sustainable in that sense where the cost of acquiring these users and maintaining these actually makes sense
for your protocol? So to design more sustainable system like that, I think we need to we need to define what the role of the airdrop. So I think as a marketing tool, the airdrop is like kind of arbitrage that between airdrop cost and the LTV, lifetime value. But I think many protocols doesn't count on what's the lifetime value in here. They didn't count and they didn't calculate how many revenue from them. So if you want to really make a more sustainable system, we need to make them more compact and more optimized way to calculate LTV. Yeah.
So that's where the data comes in.
Yeah.
Maybe an example of a compact way to calculate that?
Compact way? So like we need to design the user's behavior. So how many they pay from this protocol and how many revenue we got from them. So it is very hard to like describe way. So for many Web2 company as a software service, they calculate the conversion rate and their payment rate. And so we know how the users are paying from here. But in crypto, they doesn't count with it.
And does that contradict with what we were saying about not making the goals known? Because you were mentioning like to make the system sustainable, we actually should make it unknown. But then I think on the other side, we should make kind of transparent system on how we reward. So how can we reconcile?
Yeah, I think there's two main parts to it. I think there's the how does a user become eligible, and then there's the actual reward that the user brings for actually taking the action to pay in the first place. I think the LTV question is a really good point. One of the really difficult parts in crypto right now is because there isn't revenue flowing through protocols except on L2 level. It's really hard to calculate LTV in a very consistent way. So network fees is actually probably one of the easiest ways to calculate that. But I think as more revenue is being brought on chain and there's real on chain cash flows, it'll be much easier to calculate what is the LTV of the user itself. And so I think as we move to that model, it'll be much easier to actually target users that are driving lots of network activity and trying them to get to do things on other networks as well.
I'm curious your take, Jack, because you do so much like on-chain sleuthing for airdrop. Like, what would be your dream scenario of data you can play with for a sustainable system?
I mean, I think in like a dream scenario for me, it would almost be like having a credit scoring system. Like if you give out $3,000 and then someone sells it automatically, like I think there's something where you'd be able to quantify on chain what type of, contributions, actions they're doing. And not just looking within the protocol, but like looking outside and kind of having a, like over time, being able to build out some of those pieces that might have like LTV, what type of holdings they have, what type of participations, and kind of building from there.
Nice. And I think this is where both marketing and decentralization comes in. Once you've built a reputation system, then it is really costly to switch, or probably, hopefully impossible to switch. Then you do have that one identity, even though it's unknown, it's anonymous to people. Nice, nice. So, who do you think is a good example of a project that is on way there? I think I might know your answer already, so maybe we start from here. Okay, sure.
I don't want to shill on the panel, but I think there's a lot of reputation scoring that has been tried in the past. One of the challenges is that I think a lot of protocols are trying to value proof of humanity rather than actually valuable activity in the first hand. And I think what we end up seeing is that a lot of the end users that are actually using these proof of human solutions are actually civils themselves, right? Which is kind of defeats the point in many scenarios. And, people end up, selling those private keys on dark markets and things like that, at least from what we've seen. So I think what Jack's mentioning of actually having, built out transaction history, we're actually able to target these users is kind of the dream scenario. But the way that, airdrops have happened in the past, on a one-time basis, we just haven't been able to see that take hold in the market yet.
Yeah, I think with that, I think the continuous model where you're kind of mentioning where you're building over time your transactions, you're seeing kind of what's happening on chain. I think it just gives us more data. From there, we can kind of analyze what's working, what's not working, and then be able to kind of iterate and strategize.
Any particular example?
I think Optimism has done a good job with that, with building from the lessons learned in the first airdrop to the second and the third. I think there's definitely ways that they've been able to quantify what's happening on chain over a long period of time to actually make the right decisions.
Gotcha. So maybe we can pivot a little bit because the data is talked so much about. What are some challenges we talked about, like the LTV? It is difficult to calculate. What are some major challenges in us getting there in the space to a sustainable on-chain token distribution system?
Yeah, I'd say the first one that I briefly mentioned before was just the lack of on-chain revenue kind of flowing. Also, it's really hard to calculate, what is the LTV in the first time, right? I think the second one, which we've also touched on, is just there's much more of an incentive to generate many wallet addresses that kind of use the same one at the same time. I think having cross-chain has also kind of created a problem as well, where you're trying to now target users cross-chain. A lot of the infrastructure in the cross-chain world is still growing and isn't fully mature yet. So I think once we have a lot of cross-chain infrastructure, much more mature protocols with on-chain gas flows, it'll be much easier to do proper targeting, experimentation. Sort of the way we look at it is very similar to the performance marketing world in Web 2, where you actually are able to specify budgets and run A/B tests to see how those start performing over time. But a lot of the infrastructure still needs to exist until we get to that world.
Makes sense. So in that world, how do we get there besides just time as a factor? Jack, or Isaac?
I think one piece that you can add is just better labeling. So with a system like Dune, you're able to actually see the addresses, what kind of people are doing, but we don't really know who's behind them. So even just having simple queries of this is a Aave user who's done $10,000 in loans or borrowing, I think that makes it a lot simpler, where you can kind of go you build upon that. So
got it. So labeling, community contributing, labeling data sets. Nice.
Yeah, I agree. They're kind of help these problems. So goes on, and many transactions will be tagged for the user, so we could make better reputation model. But nowadays, I think it is not very as a touch point is a good example. So I hope to see it in the future.
Gotcha. I think I heard it from somebody else. The way Web 2 and Web 3 work is almost reverse. In Web 3, there's so many sophisticated model systems, but the foundation, the data, the user, it's just not there. So taking that angle, how does Web 3, this blockchain world, enables new behaviors and features in terms of the governance or marketing for on-chain token distribution? Because a lot of it we already talked about. It's in Web 2, you have performance marketing, right? So there's a lot of similarity and things you can borrow. But I'm curious, what do you think, how Web 3, in the world of Web 3, how would that differ and how we can do it better?
I think Jack has already mentioned it before, but giving users ownership of the tokens themselves and ownership in the protocol and make them actually true stewards of the protocol is one of the strongest ways to do that. Everyone has kind of heard that example of, what if Uber drivers have
have Uber stock, you know, they'd be more incentivized to bring other drivers inside of the network. We haven't actually seen that thesis play out in crypto because really most of that is going in speculation right now. And so I think as we actually see more models where tokens are end up at the hands of participants, and we're actually using things like V tokenomics to actually lock up tokens for a long period of time, I think we'll start seeing a lot more interesting models where we have financial incentives tied to actually the sustainability of the network itself. So I'm really excited to start seeing kind of this combination of locking up tokens to actually make users financially incentivized to help bring new participants inside of the network itself, and kind of have that tied to the incentives.
Gotcha. Jack?
Yeah, I think kind of going on that, I think having the token ownership, that's what really drew me into crypto, is that I was able to earn tokens for completing work on chain, like doing stuff like Dune dashboard. That's really cool. And like, I hadn't really experienced that in my day job before. But I think what's another piece there is that crypto is like just like all on blockchains, which are all open databases. And we can kind of, anyone could go in, look to see what's happening, see what strategies are like working, what's not working, how your competitors are doing. And I think that has like an enhanced flow of information. Whereas in like Web 2, everything's behind kind of moats and like you can't really understand what's going on. So I think it's just like a very interesting model where we have like a better, quicker like adaptation and be able to understand what's going forward.
So to be clear, what is the question again? Just how does Web3 enables new behaviors and features in terms of governance for marketing for token distribution?
So I think the last answer very hard to answer it.
This time we start with you.
I'll have it.
Got it. I think the answer I hear is one, we can use vesting to incentivize more. Another one is about the open nature of the blockchain, how it enables better flow, more like even faster iteration. I'm just curious, like anything else that can help, like vesting alone. You think that's like enough to help incentivize people? That we hear this that?
Clear question again.
Yeah. So what I hear from the panelists is just using vesting, we can correctly incentivize the owners of the tokens to act in a way that's more sustainable, right? And then we think that we'll be able to retain them with the vesting schedule. But is that enough, in your opinion?
I think it is enough because, like, as a unit of on governance, like the retail side doesn't want to making other blockchain protocol, but many VCs and many other whales are just voting on what they want. So we need to make more fair way to voting on the governance, I think. Yeah.
And for the other, because you're right, like it's like hard, well, they're making this decision, right?
Yeah.
So how would you design that system to be a bit more?
So I also like the Gitcoins model that like what can call this voting though? I couldn't remember the exactly. So like calculate as a share root for the token amount and the voting. So we need to make more design about that. Like not only the amount, not only the token amounts affect voting. We should do more handle it.
Okay.
Bravo.
Zach?
Yeah, I think it's hard to decentralize a protocol within like 3 years. So like most of these tokens have only been around for a short period of time. So I think really taking a long-term strategy is really important. And yeah, maybe it is going to be a bit, a couple like major participants, but over time, thinking about strategies of how really to get the community involved, being able to kind of go.
What are some strategies that you can use to
Yeah, but I think, just like having people like incentivizing government participation, having kind of like things like hackathons or like bounties. I think like retro public goods, like what Optimism is doing, is a really cool strategy where you're bringing in new builders to the ecosystem and rewarding kind of things that they've done. So those are a couple of things I feel.
That's it. Thank you.
Yeah.
I'll pull the shield card here, and I think quests are one of the best ways of distributing tokens in a decentralized way. Just because you have that hyper-targeted nature of figuring out who is the best user or the most loyal users, and putting them in a token rebate that is
actually long-term aligned with the network itself and defeasible.
I'm actually curious about because one thing I work with Dune as a DevRel, so one thing we notice when we onboard new users, there's a huge difference, a huge jump between the the onboard level to an actual like medium or more sophisticated user level. So how does like RabbitHole think about when designing these how does it help user actually become a really valuable user for these protocol versus
when we started the company, we focused a lot on onboarding because there wasn't many users in crypto. And I think once we saw a lot of hot space being filled in easy chains, we actually started moving away from education and actually more towards how do we actually help high quality users actually get matched into the right protocols. And so a lot of how people use the allow function now today is actually very small, allow us hyper targeted to highly valuable users of how do you actually make them more retained in the network over a period of time. And so I think we're starting to see a much more of a demand to actually retaining the valuable users side of a network because they're driving most of the activity. Aside from just bringing new users into crypto, we actually end up most of the time just getting after phishing attempts and things like that, and end up having to go into Discord support.
but that is too narrow.
I think for a lot of the protocols today, you're actually looking to have participants and contributors inside the network. They're looking for the power users. We're actually going to be taking hold of them. Those are the ones that are actually going to be stewarding the protocol outside of the core team. I think, to Jack's point, it takes many years to decentralize a network. And so once you kind of move to the protocol, the contributor layer, I think, over many years, then you get to the new users who are then onboarded into the network to actually participate. But again, still very early days of this. I think teams are still trying to figure out how do we actually move beyond us kind of just controlling token distribution to actually having the community decide how tokens are allocated. So
that's more from like a product perspective. I'm curious from like an investment perspective, when you look at like token distribution, like what are the things you're thinking about? Like, what are the things that like bothers you and I like to wait, things that you want to solve?
Yeah, I think for me, like a lot of times when, we're looking at trends in the industry, we'll see there's rapid growth. And then you kind of like look at the bar charts like, wow, this looks great on paper. And then you really kind of dive into the data and do some due diligence. And you're seeing that maybe the incentive model of why those users are there, whether it's disciples or farmers in general, is kind of misaligned. So I would like to see, like, as mentioned, like better labeling of understanding and segmentation of the different types of usage on chain. So whether that be like how long people have been there for, or like what types of other protocols are they interacting with, so to get a better sense of what's actually happening, and not just like the overall high level KPIs.
And as on the we to more segmentate the user. Like last year, maybe Danny Sweet has a session for that. So we need to make more strategy by the segmentation for all the users. Like
That's curious for you personally, what are interesting projects you've done in terms of labeling or segmentation that you can share with the audience, and on like how the labeling or the segmentation has helped her analysis?
so, one of our portfolio is that main trip class is one of the K-pop idol NFT project. They have their own governance, and they really make the strategies for the whale, like how's the whale boarding strategy and boarding way, and they make their own governance more fairly. So that's the one of the case, I think. That's it.
Yeah, I think for me, something like I always come back to is like one, like even like something as simple as an ENS gives some sort of identity behind that. So like understanding like what type of people are interacting on the chain. And then also like wallet balances are really big for me. So when understanding like, is this person have like a whale per se, or is it like kind of somebody just like $10? That really segments like, I think, organic usage versus some of the more kind of basic usage, like a bot or something like that. So that's another thing. Bot way as well. So
Do you want to share an example also?
I think that a lot of things that we look at is what is the participation ratio of the existing token holders on the network. And so when we look at how decentralized the network, if a large amount of the token holders is actually participating in the network, that
in our opinion, it is something that would be sufficiently decentralized because you actually have very little speculation that's happening. And so that's what we do segmentation. We're looking at how do we actually engage those users who are already token holders but have not used the network yet.
And maybe there's a world where you can avoid targeted campaigning to those users. Nice. Okay, in the interest of time, I'll ask one last question and open it up to the audience. So what do you see the field of token distribution headed in the next 1 to 2 years? And we'll start over there.
Wow. I think this topic is very hard because there is no answer from now on. So
Yeah, the world
One-
you're like,
yeah,
Getting
for
out.
2 years, I think many things are on our. So let me start again. So hashes like investment thesis is that people's behaviors are more moving to the online, and when people's moving to immigrate to the online, how could we believe the on like online behavior or online governance or online things? So maybe 1 or 2 years later, many other protocols and like really Web2 systems also release on blockchain, and they need to use the on-chain incentive for their marketing and their governance for that. So I believe many Web2 companies are more adoption in here. Yeah, I think that we'll start to see more continuous airdrop models go forward. The point system, I think, will be still a way to kind of adapt strategies over time. Hopefully that we can see like some of the lessons where, you're building out, like I said, this reputation where you're not just rewarding participation, but also like really looking to see that these people aren't there just for the incentive. Additionally, I think a little bit further out, but I think within the next couple of years, we'll start seeing like ZK technology applications come out where you're able to bring off-chain data. So maybe even verifying someone's identity, they're a single person, but still have that privacy concern. So there's a lot of cool things with porting reputation over for wallets that I believe ZK can help bring online.
Yeah, I think in the short term, I'm pretty bearish on the point systems. But I think long term, I'm really optimistic with using AI actually being the ones that are distributing tokens on the alpha protocols. And I think as we start to decentralize large language models, I think as we'll start to delegate tokens to these LLMs, actually figure out how do we get tokens in the hands of the right participants to actually make the network more sustainable long term, since they'll probably know more than the core team or contributors itself. I think one of the problems that we see right now in governance is a lot of contributors are making a lot of short-term decisions to actually try to take advantage of the network itself. And so I think if we figure out ways that we can think long-term about a network, and I think AI actually has one of the greatest opportunities to help us get there.
Nice. I'm very excited about this future picture you guys are painting, right? There's like,
I just want to ask, is it optimization? I think AI will decide what to do with this picture.
Whenever the AI thinks is the best.
sorry. Lovely. So maybe in the future, we'll see, Web2 consumers coming on-chain more and more. And we'll see the on-chain reputation system held by technologies like ZK. And we'll might see a world where the AI is doing all sorts of good things for even the on-chain token distribution side.
Yeah.
All right. Thank you, panelists. We'll open it up. So now we'll open up to the audience for questions. Did you raise your hands? My lovely colleague will give you the mic. No one has a question about on-chain token distribution? Too shy? Too ups?
So one of the token mechanics we haven't talked about too much is like yield farming, where people are incentivized to kind of put their tokens in the protocol Aave or other protocols like that to provide liquidity. What's your take on kind of that to incentivize activity on chains?
Yeah, I think. Sorry, can you repeat the question there?
But just generally your take on distributing tokens via incentivizing yield farming and things like that.
Yeah,
there's standard airdrops and things.
Yeah, I think yield farming in a lot of cases is shown just similar where people come, you generate TVL, then afterwards you're seeing the retention kind of shut down. So like I said, it's a very short-term kind of incentive model where hopefully we can think about some ways to maybe encourage longer-term lockups or something like that. So I think there's a couple ways you can play around with that, but
Now, we've got great minds here sitting. Oh, right there.
Cool. So you guys talked about some examples of whole tokenomics or companies that had provided some value, I guess, or had some good ideas. I think you mentioned optimism. I was just wondering, are there any other companies or products that have full models of distribution that you guys are following or could be improved upon, but have a good baseline, something like that?
I love DYDX, by the way, and that model like cycling, like sustainable model, like giving incentive by using their based on their transaction. So I for the seasonal airdrop model, I focus on DYDX.
I think the optimism and the DYDX are probably the two best examples right now. There of course are others that are trying things like points models with things like Printech and Blur. We just haven't really seen the success of the points model kind of playing out yet. So I think those are still the DYDX optimism are two best examples that exist today.
yeah, I think companies like RabbitHole are a pretty interesting way to see where the market might evolve. Spindle's another example, layer 3, where you're able to activate new users and also be able sometimes see, like Spindle's case, be able to bring some off-chain data and then provide it.
I'm actually working on a tool to make token distribution easier to manage and launch, etc. So if you have any ideas, what are the tools that are missing out there, or like killer features, what needed both for founders, investors, and communities that does exist yet, so that I can build it. I think it could be a competitor with RabbitHole. I think you can mention it first.
Yeah, I would say there's like there's two areas of token distribution tools that we kind of see. There's like one which is what is sort of like the Carta for Web3 really look like, which is how do you get investors and the core team and communities sort of that full stack toolkit to give them their tokens, and then there's sort of the growth toolkit as well, which is how do you actually get tokens in the hand and participants as well. So I'd say those are kind of the two big categories that we see in the market right now. And I think that the latter is something that's kind of growing really fast right now. But definitely have a lot of thoughts on this. You want to chat about it after.
And in my aspect, so as a perspective, as a marketing tool to token distribution, I want to see as a AARR funnel, and how could we calculate each conversion rate for the code. So I want to see more details about that.
We saw two other questions. Can we squeeze them in? Yeah? Okay. Nice.
Hi everyone, thank you so much for the panel. So I think since the discussion is focused on the airdrop, so I'll just ask about that. So it sounds like from what you guys are saying, we are still at the experimental stage. So people are experimenting with vested airdrops, pay as you use, etc. I think my question is, does this mean that in a way, a lot of more projects have to experiment, and maybe some of them, or even most of them, might fail in the short or medium term in order for us to finally arrive at an optimal token distribution? So basically, we will see a lot more startups experimenting and failing with airdrops. Do you think that's the case?
Is the question, are projects need to fail in the short term for others to see them long term?
Yeah, because I think we are still missing a lot of data. We're missing a lot of the economic modeling, etc. So I think all the projects nowadays still have to experiment with airdrops. I think just 2 days ago, Celestia experimented with their own airdrop, right? So only time will tell if there's a successful token distribution. So does this mean that, a lot more startups have to experiment and potentially fail in order for us to find out what's the most optimal token distribution solution?
Yeah, I think that's always the case where you have to have a bunch of projects go through the ringer and see what works and what doesn't before other things start to exist. This sort of happened with yield farming. I think we'll start to see a lot of projects experiment with things like probably similar to what we saw with sushi in the 2020 era, where people are forking protocols and distributing tokens. And it's sort of a decentralized kind of from day one, or trying to be decentralized from day one for the fair launch model. So I think we'll start to see those things come back in the next year or so. But I think those are the experiments that will be quite exciting for how token distribution starts to change.
Yeah, I would suggest just because we're still acquiring a lot of those data points about what's working, what's not working. That's why I do like the continuous airdrop model where, you get more at-bats, you get more data points. But I also think too, just because an airdrop doesn't go well, it means your protocol's going to fail. There's still a lot of protocols with that. Maybe their airdrop not go as expected, but people then go on the secondary market and can buy those tokens because they really believe in the long term.
Hello, it's really nice talk today. And I'm a bit curious, what's the evaluation metric for data-driven token distribution? I'm asking, how can we know the effects, if it has a positive effect on the final results?
So is your question is how to evaluate the effect of airdrop or token distribution?
Yeah.
I think most of these models are overvalued right now because most of tokens have rely on many expectations of the future. So we cannot evaluate that exactly, but we can compare each model, which one is more well evaluated, like makeup flow, like network model. So we could compare and need to find more optimal way to calculate the valuation model, I think.
Yeah, I think it really depends on what your Y variable, your target variable is. So for some airdrops, it might be that they just want to gain a decentralization, liquidity, that type of matter. But I think at the end of the day, it really always comes back to retention. So seeing that people are coming back to the network, participating, doing transactions on chain. That's kind of how I've always modeled it. And there's various different segments you can go.
Yeah, we look at it mostly from the LTV network fee standpoint. So how much network fees were generated by the user after the tokens were distributed relative to whatever the CAC was, the cost to acquire the user.
All right, with that, we'll wrap up the panelists for today. Thank you so much for coming on today.
Thank you.